Good evening, ladies and gentlemen. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Thursday, January the 3rd, 2013, and here is today's After the Bell market summary. We want to first start by taking a look to see how the indices traded today. The Dow Jones closed down 21.19. The Nasdaq closed down 15.53, and the S&P 500 closed down 3.05. Starting off with the breadth here, we had 2,997 issues advancing. We had 3,256 issues declining on the NYSE, NASDAQ, and AMEX. So pretty much just about a 1-1. As you guys know, the previous 2 days we have had breadth in favor of the bulls in more than a 5-to-1 ratio. So today pretty much explains it all. A little sideways, up action, down action. A little sideways consolidation up here after yesterday's huge gap that we had across the board in the indices and in different sectors and key indices and stocks. So let's go ahead and take a look. I want to start off today with the Qs, the triple Qs. You can see here the triple Qs are back above that little range that we've been talking about, the 64.25 level. Then we have this little range that we've been watching here around the 66, call it 66.5 level. The longer we can stay above the 66.5 level and build a higher base, that's definitely going to bring some more confidence into the market. If we pull back in, people will still have, traders and investors will still have confidence. It's going to depend on if we pull back in, how fierce we pull back in. If we pull back in pretty smooth, that would be good. But we pull back in hard and we just start selling off, and we go down this gap fill, chop around the gap fill, and come right back down. That's definitely not going to be bullish at all. But if we can form a nice little high base or get a nice little low volume pull back into some of this gap right here to at least try to fill some of it, or even better yet, all of it, that would be pretty good as well. So the triple Qs are still looking pretty good, just as we expected today. A nice little sideways consolidation on the Qs there. Just the same thing happened across the board in some of these other key indices here. Let's take a look at the well, first of all, some levels that you want to watch going forward for tomorrow. Definitely today's highs. If we can break past today's highs around the 67.37 level, we can see the triple Q somewhere possibly around the 68. If we break today's lows, we want to be watching yesterday's lows around 66.47, and then we have this gap fill, of course, down towards the 66 level and so on. That's for the triple Qs. If we take a look at the SPY now, all right, SPY. All right, same thing. High base consolidation needs to be taking place here. Or we're going to be expecting some type of pullback into some of this gap. As long as the SPY can hang above 143, that looks pretty good. If we can hang above 145 and form some type of high base consolidation, that will give me more confidence that people are definitely looking to try to get involved in equities, as we'll be holding a higher bid. If we pull back in, want to make sure we pull back in on low volume in an orderly fashion, and not a crazy little sell-off where we just sell off fiercely and fall back inside this little key trend, below this key trend line that we have been tracking. So therefore, you want to make sure you watch this 145 area to the top side. If we break past today's highs around the 146.38 area on the SPY, we can maybe make a move up towards 147. Of course, the 52-week highs are around this 146.76 level. Let's take a look at the IWM. The IWM, as you guys know, has been showing some nice relative strength. All right, making a new all-time high today on the Russell 2000. IWM, that high is 87.28. Definitely, needs some pullback action, because just think about it. If you're buying this market, down here, wouldn't you be taking some profits up here? All right, that's why we have to wait for that little high base consolidation, that little orderly fashion pullback into some of these moving averages right here. We have this nice little bullish channel, broke out, closed above it on Friday. All right. Closed above it on Friday, and it's looking pretty good. Sorry, not Friday. That is actually Monday. Closed above it on Monday, gapped up on Wednesday, and then a little pause day today on Thursday on the IWM. So IWM, if we can hold that 86 level, that would be good. If we fall back in below 86, as long as we can hold this 85 zone base down here, something that'll look pretty good as well. It still look constructive. Let's take a look at the GLD. GLD has been everywhere. I'm going through a lot of forums, and I see a lot of people getting confused with the GLD. All right, and GLD, I look at the gold futures. So let me go over here to the gold futures. I get a better read off the gold futures. So let me go ahead and bring that up. I've been kind of gauging you guys and maneuvering us, together through these markets in the gold sector via this via the gold future. So let's go back and take a look at it. We did get a nice initial bounce off that trend line. One thing you have to keep in mind though is, how long do we stay above this key trend line? If we bounce like we did right now and come right back to it in a short amount of time, which we have so far, I would say, and I would consider this amount of time short term. See here, 1, 2, 3, 4, 5, 6, 7, 8, 9 days here. So about about a week and a half here. We're already about to come back to this level. If we fell and we continue and we hold below 1640, we're going to be looking for a move and go to the downside here. Now, if we chop around and hold the 1640 level, all right, do a little shake and bake action below this key trend line that comes from these little lows that we were making back here in May and June and July. All right, this key trend line, which I've highlighted with these yellow ovals here. If we can hold that level, that'll be pretty good. That level's going to be coming in around the 1640 level. So even if we do some little shake and bake action down here, this could actually be a buying opportunity on a dip in the gold. We'll have to wait for we'll have to wait for more clues, and we'll have to wait for more clues to see if that actually sets up. But again, this is a decent area of support on the gold futures from this key trend line right here that we have highlighted, and also from this key prior resistance, which should now act as support, which had acted as double support from those key inflection trend lines that I'm showing you guys right now, which was why we called it bouncing gold back, a week or so ago. And now it's coming right back into that trend line. So it's going to be very important to see if those dip buyers come in and try to support gold prices down there again. But if we take a look at the GDX, I've been, showing you guys a little roadmap that I use via my channel system for the GDX. And the GDX is continuing to fail to hold above this key channel area that we have shaded right here. All right, you can see how it continues to hold below that key trend line, which we've been tracking. If you guys have been watching our videos, I'm not going to go through the whole spiel. We call the breakdown in the GDX right here when it broke this key little proprietary, not really proprietary, but just, proprietary for the sense that, we see it. We have a system of, figuring ways to draw channels and connecting key inflection points. And therefore, this was a key inflection point that we brought to you guys that follow our videos, a short on the market, and therefore now we're still using that key trend line as an inflection point because we can't get above it. So the longer we continue to see that action, we continue to make these little slightly lower highs and slightly lower lows. That's going to give us confidence that that what they're doing basically is selling every rally on the GDX until we start holding really above 47. I think the same thing could continue to happen. So we'll have to keep an eye on that sector. But you can see all those miners that popped up, say last week. They're giving everything right back. Look at GG, one of the bellwether names in that sector. A lot of people look at when they're looking to get invested in the gold miners. Is looking pretty crappy still. Try to get back inside this little key channel that we have highlighted here. You can see it failed once before and it failed again as we're below it. So that's not looking good. Newmont Mining as well. NEM, same thing. Got a nice little bounce here back into these moving averages. May need to come back down and see if this 43 level is going to hold, as support. If it's valid, test the validity of it. As you guys know, we call that Newmont Mining for a triple bottom buy down here. We're getting guys long the miners to watch the miners, 2 weeks ago on that Thursday, right here. So therefore, we want to see what's going to happen. Newmont Mining got rejected right at these 50-day simple moving averages. It may need to come in here and pull back a little bit more to see if it can form some type of higher base off these key inflection points to let us know that short-term trend and divergence is starting to pick up back in the bull favor. So we'll see how that plays out. Let's take a look at the U.S. dollar. The U.S. dollar has been showing some strength while the market has been showing some strength as well. So there's kind of a little disconnect going on, as I mentioned in the weekend video, and now I'm starting to see a lot of people blog about it. Not saying that they didn't see it before, but just seeing that a lot of people are starting to notice the fact that the dollar is going up and the markets are kind of holding up as well. So something's going to change, or something could be changing right now with the fact that the dollar is going to get strong along with the market. Or if that's not the scenario, something's going to change. Either the dollar's going to continue going higher, the market's going to pull back a bit, or the dollar's going to roll over, the market's going to continue to hold this little bid that we have and continue trending higher. Or we're going to see them both start to break that little inverse correlation, and the dollar is actually going to go up. The market's actually going to go up with a stronger dollar. So we'll see how it plays out. That's what we're watching on the dollar. The euro, as you guys recall, we did say that euro could get a little bit of a pullback off our key little challenge that we had at the top. What do you know? We just use the euro as a gauge, but the euro did have some sell action up against our key little trend line right there that we have from our channels. The euro does look like it wants to pull back a little bit more, maybe down towards say 120, $1.29.5, we'll see how it plays out. I mean, I'm just gauging the euro to kind of gauge a dollar in the market in general, and the macro analysis that I do and research. So anyway, let's take a look at crude oil futures. Crude oil futures, went to that 94 level that we were discussing here. As a nice little target. Remember, this was prior resistance. It broke out, held up, trapped some bull longs right there. Nice little bull trap right there. Sold off, retested, back test held, got smoked, broke out this little range right here. All right, now, hit our little 94 target. Now it's pulling back. If this thing can force some type of high base consolidation and consolidate below this key 94 level, we may be trying to build up some juice to try to break back above 94, back up towards the 95 area and back to that little congestion that we had back here. So we'll see how that plays out. Crude oil looking for some type of high base consolidation, maybe sideways action, maybe even a slight little pullback. Some of you guys out there that trade it, I know via the USO, you can see USO, same thing, got rejected at its declining 200-day moving averages. Could pull back for a gap fill back down towards the $33.40 level there. SLV, don't want to skip this. I know some of you guys out there trade the silver as well. SLV heading right back to that $29 level there. If we hold it below 29, look for this thing to maybe possibly go down towards 28 to fill this little gap that we have back here from, back there in August. So we'll see how that plays out. And now let's take a look at a couple of quick names here. We had some energy, had some strength in the healthcare sector, MRK, ABT. Just looking at this little heat screener right here. Some of the energy stocks are looking good, but we definitely want to make sure the market's working in our favor if we try to get long these energy stocks. As you guys know, when the market was trading lower, the energy sector was the weakest, was the weakest sector and the hardest hit during the down days. So we'll see how that plays out. If the market starts to hold up, well, you're going to have money starting to flow back into these energy stocks that have got some beaten down in the past couple weeks, past couple months. So we'll see how that plays out. Apple got rejected today at the declining 50-day simple moving average and exponential moving average around this 558 or close to this 558 level, all right, since yesterday. You can see, again, same thing today. Apple may want to fill the gap. Amazon is looking much better than Apple. Amazon is a stock that you want to continue to watch because the market has some traction. This thing could break out over 262 and make new all-time highs. Best way to play this, in my opinion, is possibly some type of option, some type of call spreads, vertical call spreads. Maybe sell some puts versus these lows over here if we consolidate a bit more and build a bigger base, better base. It all depends. There's different ways to skin the cat. Just have to find out what works for you and what you feel comfortable with doing. So Amazon, IBM, discussed IBM coming into this little key area. May need to consolidate up here, but once IBM can get above this 198 level, I think this can make some nice traction back to the top side as we have all this free room right here from this little gap action back up towards 202 all the way into 210. Of course, obviously it's not going to happen overnight, but it's going to take some time to see what this wants to do. Some other names out there. EOG, this is a nice little strong energy stock name, energy company. EOG Resources looks pretty good. Again, may need some type of little consolidation right here as the market, may chop around for a bit up at these levels. And some of these stocks that look like they want to go higher, they do, but they need time to rest. As you know, we have had a big expansion in the past couple of days. So in any case, make sure you're in the chat room, mywallstreettv.com. Password is SMART. Our community is definitely starting to build now. And if you're looking to trade with our firm, you can contact me at ccooper@wallstreettrading.com, as we can definitely put you in a good starting position if you're looking to start your career off as a professional day trader. In any case, have a great day. Check out the website, wallstreettrading.com, and I'll see you guys bright and early in the chat room tomorrow morning at 8:20. Cheers.